In a move that sent shockwaves through the financial world, former President Donald Trump signed an executive order in 2024. This order created a strategic Bitcoin reserve for the United States. It also established a digital asset stockpile. This bold decision thrust the U.S. government into the heart of the cryptocurrency revolution. It sparked intense debate about the future of the U.S. dollar and the role of digital assets in global finance. This executive order signaled a significant shift in U.S. policy. It acknowledged the growing importance of cryptocurrencies. The move also raised questions about the government's intentions and the potential consequences for taxpayers. Was this a calculated move to safeguard the dollar's dominance, or was it a risky gamble with potentially disastrous consequences? The cryptocurrency world watched with bated breath as the details of the executive order unfolded. Some saw it as a validation of their long-held belief in the transformative power of Bitcoin. Others viewed it with skepticism, wary of the government's involvement in a decentralized system. As the world grappled with the implications of Trump's decision, one thing was clear: the landscape of global finance had been irrevocably altered. This was a gamble with the potential to reshape the global financial system, for better or worse. The Strategic Bitcoin Reserve, as envisioned by the Trump administration, is a digital Fort Knox. It is a secure repository for Bitcoin. This reserve aims to provide the U.S. government with leverage in the increasingly influential world of cryptocurrencies. The reserve is funded by Bitcoin seized in criminal investigations. This includes drug trafficking, cybercrime, and other illicit activities. The creation of the reserve marked a significant departure from traditional notions of national reserves. It signaled the U.S. government's recognition of Bitcoin as a strategic asset. This move has been compared to the establishment of the Strategic Petroleum Reserve in the 1970s. Both were created in response to geopolitical instability and aimed to protect U.S. interests. However, unlike oil, which is a physical commodity, Bitcoin exists only in the digital realm. This raises unique challenges for securing and managing the reserve. The government has remained tight-lipped about the technical details of how the reserve is secured. It has also not disclosed its location, citing security concerns. The Digital Asset Stockpile, on the other hand, is a broader collection of cryptocurrencies. It includes those seized by the government. These digital assets are subject to future legislation and regulation. The creation of this stockpile reflects the government's understanding that Bitcoin is just one player in a rapidly evolving ecosystem of digital assets. The exact size of the U.S. government's Bitcoin holdings is a closely guarded secret. However, estimates suggest that it possesses a significant amount of Bitcoin. This is largely due to seizures from criminal activities. David Sachs, a prominent venture capitalist and former PayPal executive, has been a vocal advocate for government investment in Bitcoin. He has publicly estimated that the U.S. government holds over 200,000 Bitcoin. This amount is currently valued at over $17.5 billion. These holdings, if accurate, would make the U.S. government one of the largest holders of Bitcoin in the world. This has fueled speculation about the potential impact of the government's Bitcoin strategy. Some analysts believe that the government's accumulation of Bitcoin could drive up the price, benefiting early adopters. Others, however, caution that large-scale government sales of Bitcoin could have the opposite effect, potentially crashing the market. The lack of transparency surrounding the government's Bitcoin holdings has only added to the uncertainty and speculation. The government has yet to articulate a clear strategy for managing its Bitcoin holdings. It remains unclear whether it intends to hold Bitcoin long-term or use it for specific strategic objectives. The establishment of the Strategic Bitcoin Reserve has not been without its critics. Concerns have been raised about the lack of transparency surrounding the government's crypto holdings and acquisition strategies. Critics argue that the government should be more open about its Bitcoin holdings and the criteria it uses to acquire more. Another point of contention is the inclusion of altcoins, or alternative cryptocurrencies, in the Digital Asset Stockpile. Jason Yanowitz, co-founder of Blockworks, a leading cryptocurrency research firm, has been a vocal critic of this aspect of the plan. He argues that including altcoins sets a horrible precedent and opens the door to arbitrary asset selection. He fears that this could lead to government favoritism and market manipulation. Taxpayer implications are also a major concern. critics, including venture capitalist Joe Lonsdale, argue that taxpayers should not bear the risk of the government's foray into the volatile cryptocurrency market. They fear that the government's crypto investments could become a taxpayer-funded slush fund. They also worry about the potential for insider trading and enrichment of government officials with access to non-public information. These concerns highlight the challenges of reconciling the decentralized ethos of cryptocurrencies with the centralized nature of government. The debate over the strategic Bitcoin reserve reflects a broader societal debate about the role of government in the emerging digital economy. Section 5. A safeguard for the future? Proponents defend the crypto reserve. Despite the criticism, the strategic Bitcoin reserve has garnered support from some corners of the financial world. Proponents argue that it is a prudent measure to safeguard the US dollar's status as the global reserve currency in an increasingly digital world. They point to the growing adoption of cryptocurrencies by individuals, businesses, and even some governments as evidence that the US cannot afford to ignore this trend. Russ Mould, investment director at AJ Bell, a UK-based investment platform, is one such proponent. He argues that using forfeited assets to build the reserve, rather than using taxpayer money to buy Bitcoin, is a pragmatic approach. He believes that it allows the US to gain exposure to the potential upside of Bitcoin without putting taxpayer money at risk. Furthermore, proponents draw parallels to other strategic reserves maintained by the US government, such as the Strategic Petroleum Reserve. They argue that just as the oil reserve provides a buffer against supply shocks, a Bitcoin reserve could help mitigate the risks posed by the growing influence of cryptocurrencies. While acknowledging the volatility of Bitcoin, proponents argue that its decentralized nature and limited supply make it a potentially valuable hedge against inflation and a weakening dollar. They believe that a strategic Bitcoin reserve could strengthen the US's position in the evolving global financial order. Section 6. Market Mayhem. Bitcoin's roller coaster ride after Trump's announcement. The announcement of the strategic Bitcoin reserve sent ripples through the cryptocurrency market. Initially, Bitcoin's price tumbled nearly $10,000 as investors grappled with the implications of the news. The uncertainty surrounding the government's intentions and the potential for increased regulation triggered a wave of selling. However, the market quickly recovered and even rallied in the days following the announcement. The initial shock gave way to a sense of legitimacy for Bitcoin as a strategic asset. The entry of the US government into the market was seen by some as a sign of mainstream acceptance and a harbinger of future growth. Despite the subsequent rally, experts cautioned that Bitcoin's volatility remained a concern. The cryptocurrency's price is notoriously susceptible to news and speculation, and the government's involvement in the market could exacerbate these swings. The potential for regulatory changes and government intervention adds another layer of uncertainty to an already volatile asset class. The long-term impact of the strategic Bitcoin reserve on the cryptocurrency market remains to be seen. Some analysts believe it could lead to greater stability and maturity for the market, while others fear it could increase volatility and government control. Section 7. A nation divided, states forge their own crypto paths. The establishment of the strategic Bitcoin reserve has sparked a nationwide debate about the role of cryptocurrencies in the US economy. While the federal government has taken the lead, several states are also exploring their own initiatives related to Bitcoin and other digital assets. Oklahoma, Utah, and Arizona have emerged as leaders in this movement. They have introduced legislation to create their own strategic Bitcoin reserves. These states, often aligned with pro-business and libertarian ideologies, view Bitcoin as a tool for economic development and a hedge against inflation. The Satoshi Action Fund, a nonprofit organization dedicated to promoting Bitcoin adoption, has been instrumental in supporting these state-level initiatives. The organization provides resources and guidance to lawmakers interested in exploring the potential benefits of Bitcoin. The emergence of state-level crypto initiatives highlights the growing momentum behind the adoption of digital assets. It also underscores the decentralized nature of the cryptocurrency movement, which is no longer confined to the fringes of the internet, but is increasingly entering the mainstream. The parallel development of federal and state-level crypto policies could lead to a complex and potentially fragmented regulatory landscape, It remains to be seen how these different levels of government will coordinate their efforts and whether a cohesive national strategy will emerge. Section 8. From Fort Knox to Crypto Keys, Drawing Historical Parallels. The creation of the strategic Bitcoin reserve invites comparisons to other historical instances of governments accumulating strategic reserves. The most obvious parallel is the establishment of the Strategic Petroleum Reserve in the 1970s following the oil crisis. The oil embargo imposed by OPEC countries exposed the vulnerability of the U.S. economy to disruptions in the global oil supply. The Strategic Petroleum Reserve was created to mitigate this risk by providing a stockpile of oil that could be released in the event of another crisis. Similarly, the Strategic Bitcoin Reserve can be seen as a response to the perceived threat posed by the rise of cryptocurrencies to the US dollar's dominance. Just as oil was the lifeblood of the industrial economy, Bitcoin and other digital assets are seen as playing an increasingly important role in the digital economy. However, there are key differences between the two reserves. Oil is a physical commodity with tangible uses, while Bitcoin is a digital asset whose value is derived from its scarcity and its role as a medium of exchange and store of value. Additionally, the oil market is heavily influenced by geopolitical factors and cartels, while the Bitcoin market is more decentralized and driven by market forces. Despite these differences, the historical parallel highlights the importance governments place on securing strategic assets, whether physical or digital, to protect their economic interests and national security. Section 9. A gamble on the future, weighing the risks and rewards of Trump's crypto legacy. The Strategic Bitcoin Reserve stands as a controversial legacy of the Trump administration. It is a bold experiment with uncertain consequences, reflecting the former president's penchant for disruptive and unconventional policies. Whether this gamble will pay off for the U.S. remains to be seen. On the one hand, the reserve could help secure the U.S.'s position in the rapidly evolving world of digital finance. It could provide a hedge against inflation and a weakening dollar, and it could give the U.S. leverage in the global cryptocurrency market. On the other hand, the reserve also carries significant risks. The volatility of Bitcoin could expose taxpayers to potential losses. The lack of transparency surrounding the reserve raises concerns about accountability and the potential for abuse. And the government's involvement in the cryptocurrency market could stifle innovation and undermine the decentralized ethos that underpinned its creation. Only time will tell whether the Strategic Bitcoin Reserve will be remembered as a stroke of genius or a costly blunder. What is certain is that this bold experiment will continue to shape the debate about the role of cryptocurrencies in the global economy for years to come.